Good afternoon. Today is Monday, December 6th, 2010. This is Brian Shannon from AlphaTrends.net. Let's take a look at this market here. The SPY closed with a slight loss here today of 13 cents. It had a green candle because the close was above the high, but it was negative by, like I said, 13 pennies, but still holding up with this short-term pattern of higher highs and higher lows. Maybe a little bit of caution tomorrow if we break 122.50 or so. I think the more important level really will be the 122 even. That is the lows from Friday. The market remains in an uptrend. I'm sure we're going to have people calling this a double top, but don't pay too much attention to that. Those are probably the same people who called it a double top right here, and there's just no evidence of that yet. We have all these moving averages are rising, one stacked above the other, and the weekly time frame also. We're at an important level, but it doesn't mean the market can't continue to move through here. And in fact, it looks like it should continue to move through here and perhaps up towards 126, to 130 even. So the market remains bullish, but obviously that doesn't mean don't pay attention to your stops. Risk management is the most important job, and as long as the higher lows continue to dominate, you give the benefit of the doubt to the buyers. The Nasdaq was down 3 pennies today, but holding up in a similar way. That is with these higher lows, and to this little area right here, which was tested today at about 53.60, was the midday lows Friday. Obviously, we gapped lower, but the bigger level probably down there about 52 and a quarter. On the weekly time frame, it still appears as though this market is magnetized towards $55 a share. It's had a big rally, but it's digested these gains very nicely through time, right at that rising 10-week moving average. The stronger market right now really is the Russell 2000, which is pushing past what a lot of people were calling resistance, and seems as though maybe it's got an appointment with about $79 to $80 a share. Again, you look at this on the short term, just the last 4 days, it's a little bit extended, but that doesn't mean it cannot continue to move higher. It was similarly extended looking back in here as the market continued to rally. So just you can't focus on where it has the potential to go as much as keeping track of these higher lows and finding which level of support is most significant for the way that you view the market on whatever time frame it is that you're interested in. But it's in a strong uptrend. The semiconductors, obviously, we've been talking about their strength, and this market is closing in on that 33, 34 level. Continues to rally, and it's also another market that looks extended, but still has that pattern of higher lows at least. This might be a lower high, we'll see, but rising 5-day moving averages mean you give the benefit of the doubt to the market. How many people have got run over in gold recently after this failed, what everyone was calling a head and shoulders pattern that was broken last week, obviously 1 week ago today, and that GLD is now closed at an all-time high. So you cannot be quick to call a top, especially when you have these rising moving averages. Silver also up 3% today, just continues to run over shorts, and anyone who gets in the way and calling these 1-day candles a top. Tops are a process. They're not a 1-day event typically. Sometimes it does occur that way, but that's not the typical pattern. So again, just want to continue to focus on risk management and making sure that you're trimming stocks that get too far stretched away from you and replacing them with stocks that look like they have lower risk levels.